Now to Eastern Europe, and last week S&P upgraded the outlook for the Bulgarian economy to positive from stable. The rating agency said it expects strong growth to continue on the back of expanding demand, exports, but also supportive credit conditions. Bulgaria has reaffirmed its plans to carry on down the road to joining the euro by applying for admissions to the ERM2 exchange rate mechanism, despite the fact that the ECB has expressed, quote, serious concerns. So is the country still optimistic about adopting the single currency? Well, joining us now is Alexander Manolev, Deputy Economy Minister of Bulgaria. Andrew Sheets from Morgan Stanley is also still with us. So, Deputy Minister, thank you so much for joining us. Talk to us a little bit about foreign investment. Why is it declining in Bulgaria?
Well, actually, investments have been increasing for the past years. In Bulgaria, the amount of investments is above 29 billion euro for the past years. And also, we see a lot of investment from the UK. UK is one of the leading investment partners of Bulgaria with 2.6 billion euro invested so far. And there is a reason for this. Bulgarian economy has been growing very fast for the past years. 2017 marked yet another year with significant economic growth of 3.6%. We are expecting 3.8% for 2019. We can offer really some of the most favorable conditions for investments in terms of taxation system, for example. We have one of the most beneficial taxation systems in the
So is that what you're focusing on? When you come to London to speak to investors, what is the government, what kind of business case do you present to attract investment in your country?
Yes, as I said, one of the most favorable taxation systems in Europe. We have 10% corporate tax and 10% flat rate tax on personal income. We have the lowest cost of resources and the lowest operational cost for production in the European Union, qualified workforce. Our export has been increasing at an average rate of 10% for the past years, and very well developed industries, very well developed sectors as ICT. We have the fastest growing ICT sector in the southwestern Europe. Also, automotive is one of the leading industry in Bulgaria.
What is it? I'm going to bring in Andrew Sheets in just a second, but two quick questions. First of all, are you still applying for ERM2 by the end of June, and what impact will that have on the economy? And actually, you paint a very positive, picture for the economy. If there's one thing that you could be able to fix now, what would that be?
Well, the most important for ERM2 and for joining the Eurozone is maybe that Bulgaria actually fulfills all the requirements at the moment. In terms of price stability, interest rates, government debt, and everything that is concerned with ERM2. So this is a very good signal to investors mainly, that Bulgaria is a very safe place to invest. We've been very, very stable politically and fiscally for the past years, even during the years of the global financial crisis, when we didn't let to go into any liquidity situation as many other countries in the region.
Andrew, I mean, when you look at Eastern Europe, what are the questions that you ask yourself?
Yeah, so I think one question that's been coming up with us for investors is you've actually seen inflation and wages starting to rise quite a bit across Eastern Europe, Central and Eastern Europe, in a number of countries. I mean, you mentioned kind of the advantages from a cost perspective, but how do you see the relative costs across Eastern Europe, and how do you see the inflation picture, I guess, going forward?
Well, inflation at the moment for the last 12 months is 1.4%, which is quite low so far. Of course, we have some pressure on the labor market, but this is typical for Eastern Europe and for Europe as a whole. So we expect some increases in wages, but this, in terms of effectiveness, has to be, the effect has to be removed by the introduction of innovation and high technologies. So we believe that we will keep, and there is a great potential to continue to have these low operational costs in Bulgaria.
Do you worry about trade tensions between the U.S., China, really the U.S. and the rest of the world impacting Bulgarian GDP? Because you have a lot of manufacturing, you have a very strong manufacturing sector.
Yes, well, directly not, but indirectly there would be a negative impact. As I said, the automotive sector is one of the fastest growing. Today, in 8 out of every 10 cars in Europe,
Right.
there are parts produced in Bulgaria. So,
But if the U.S. puts a trade sanctions on cars,
Exactly.
then you'll be really hurt.
and also on steel and aluminum, which is used in car production and in production of parts for cars. So this would have a negative impact. So we really hope that those two trading partners will sit together and discuss these measures and remove the actions. The European Union already has shown that they wouldn't accept this kind of trade barriers. Already some analysts are talking about trade wars, and this is definitely not good news when we are speaking about two of the leading global trading partners.
Have you modeled how much it would hurt your economy?
Not yet, because we haven't measured the impact yet. But and as I said, we hope that this situation will go in a most favorable way in the future.
Deputy Minister, thanks so much for joining us. Alexander Manolev there, Deputy Finance Minister of Bulgaria.